Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Good morning. This is John Siverling, the Executive Director of the Christian Investment Forum. I want to thank you for listening in or attending this webinar. The webinar today is to review the results and recommendations that stem from an advisory survey that Christian Investment Forum did regarding faith-based investing. The first important thing is to understand what exactly we mean when we talk about faith-based investing, or BRI, biblically responsible investing. Biblically responsible investing, or faith-integrated investing, or faith-based investing, or values-based investing, or morally responsible investing, there are many, many terms used. From the Christian Investment Forum's perspective, they all result in one core approach to investing that differs slightly from another commonly used approach to investing called socially responsible investing, but also overlaps quite a bit with that. But BRI comes with many different terms. For purposes of today, we're going to focus usually on using the term BRI. And what does that actually mean? From the formal definition perspective, what we say when we say Christian Investment Forum's biblically responsible investing is an investment decision-making process that applies Christian values in the investment analysis, seeking to invest in companies that best represent those Christian values. So that's our formal definition, but what does that really mean? What is BRI? That definition that we just talked about is very common to the SRI approach. The SRI definition, the socially responsible investing definition, is an investment discipline that considers ESG criteria to generate long-term competitive financial returns and positive societal impact. But when we talk about BRI, the difference with SRI and the focus of what BRI is, I think, is well understood when we use a term or use a phrase that was used to describe it from Finney Cravilla, one of the member firms, Eventide Asset Management's portfolio manager, when he was speaking at a KA conference. You're talking about BRI is loving what God loves and seeking to own and profit from those companies that align with his love. At the very base or foundation, then BRI is really a heart issue. It is about making investment decisions based on our faith and based on what we believe God would want us to do. And then it's seeking to own and profit from those companies that we believe fit within that definition. And it's important to understand about why we think BRI is important from the perspective of that investing, that owning and profiting from companies. So the idea of BRI is about investing in companies. It's about investing in mutual funds. And that investing, the ownership of stock, the ownership of mutual funds that own stocks, or owning bonds, owning the debt of companies, is an ownership. And we talk a lot, and a lot of our firms talk a lot about the ownership aspect of investing, because that ownership takes on a responsibility, a Christian responsibility, to own and to manage our ownership and our interests in ways, and stewardship in ways that would fall within what God would want us to do. And so it goes back to that heart issue. And that really is the core difference between what SRI and BRI really are. When we get down to it, there's so much overlap. And in fact, many SRI funds could look very much like a BRI fund in terms of the way they screen. In fact, there are going to be SRI funds that look more like a BRI fund than they look in comparison to another SRI fund. Because in both areas, the level of complexity, the differences, the ways in which that investing is undertaken can differ fairly widely. But the core difference is, from an SRI perspective, it's a little bit more of focusing on that societal impact and a more humanist, esoteric approach to say, this is an important way because we want to have a positive social impact. BRI folks want to have a social impact as well, but it comes from that heart issue. It comes from the basis of what God would want us to do. And there are some unique characteristics about that in the idea of common grace versus saving grace, which is a Calvinist concept about there is grace across the board, whether you're a Christian or not. The saving grace is what makes it different for a Christian's perspective, and that's what leads to the ideas of biblically responsible investing. Another concept along that same line that kind of differentiates or highlights the difference is, we are very much alike in many respects. In fact, someone once called it co-belligerence in this area of fighting and doing good in our society. I'd like to use it more in friends in mission. We have a very similar mission, but there are some uniquenesses and differences between us. So that's the ideas of what BRI is. We can spend a lot more time on that, and we do in some other presentations we'll go through. But for now, that's the best basic description of what BRI is. So the goals for the survey itself were to gain some insights into why BRI currently lags behind the usage of SRI. SRI has grown in popularity and use over the last decade to 2 decades significantly, and BRI really does lag behind that. And so we're trying to get an understanding of that. It's also trying to create some sort of a baseline of where we are in terms of our awareness so we can build from there and understand that baseline and see where the growth occurs. And it's to understand and correct or develop solutions to correct gaps that exist in knowledge and perceptions and facts related to BRI. So that was the goals of the survey. The methodology, the survey was actually conducted in 2013 for about 60 days. At the end of 2013, we asked almost 2,000 advisors to participate in the survey. Of that, we had almost 13% did complete the survey, so we felt it was a statistically significant number and a positive and a good number to respond. About 264 advisors completed the survey. And a couple of disclosures before we get into the actual survey results and our recommendations, our conclusions from that, was that there is some self-selection bias. So, the fact is that the advisors that completed the surveys agreed to do that. They self-selected, and so there could be some bias in there. We didn't get folks who didn't want to participate in getting answers, and so the results are skewed a little bit based on that, potentially. We don't know of any reasons or any how that would affect it, but we do know that there could be some bias there. And the second part of this is that most of the advisors, not all, but most of the advisors that completed the survey were Kingdom advisors. And as such, they come with a propensity or an understanding of the Christian faith and how it affects their advisory services. And so it's a non-randomized pool. We're not looking at the full universe of advisors. It's skewed towards those who have stated an interest in a Christian-based approach to investing advice. So let me get into some of the key findings, the results of the summary of results from the survey. Number one was awareness. Really look into awareness, knowledge, and use. First key takeaway was in the awareness. And the awareness of the breadth of funds that use biblically responsible investing was not as high as could be expected among advisors who are predisposed to a faith-based advisory approach. Though there was a general awareness of what BRI or faith-based investing was. Second key takeaway is in regards to knowledge. The level of knowledge that the advisors expressed lagged behind the concepts, their awareness of what BRI is. So that gap in terms of, or the level of knowledge lagged behind what they felt like they understood about the general ideas. And this is important because when they feel uncomfortable in terms of their knowledge base, the implementation of the communication of BRI is hampered with that knowledge base that's missing. And three, the use of BRI strategies and investments into funds that use BRI falls significantly lower than the level that we would expect based on the interest levels that advisors indicated, interest levels that individual investors have indicated, and the overall market opportunity that exists out there. This creates a huge market opportunity, and we'll talk more about that, but the usage falls below for some reasons that can be corrected and for some that we still have to learn a little bit about. So as far as the opportunities and recommendations, we'll go into that in a little bit more detail as we finish up the survey. But first, let's jump into some of the information from the survey. First of all, from a demographics perspective, the survey respondents were fairly typical from the financial advisory industry demographically, more heavily weighted towards male advisors, as you can see here. Their experience level or the age of advisors is slightly skewed higher, and their experience then, not surprisingly, correlates to that. Their experience in the area is higher than is average. The age of advisors, I think the average age of the advisor industry is about 49. So you can see that's right in this area, and so you see we skew a little bit higher than that in terms of the demographics of the survey. And the respondents were fairly well experienced, but also fairly well educated in terms of certifications and licenses in the industry. So we had a slightly more experienced, slightly older, more educated pool than the industry average. Well, we talked about the familiarity with BRI initially, and as you can see here, we do have a very strong familiarity with the concepts of BRI. Almost 90% of the advisors were familiar or very familiar with the concepts of BRI. So there was generally strong awareness of what we're talking about when we talk about faith-based investing. Not only were they very familiar, to confirm that or validate that idea, is the question was asked, what do you see as critical in BRI? And in response to that, the respondents did indicate a proper awareness of what is part of a biblically responsible investing approach to investing. They saw equally that positive screening of companies and negative screening or exclusionary screening of companies were critical components in an investment approach that looks at BRI. A distant third and about equal with the ideas of shareholder advocacy and corporate governance. That goes into proxy voting, looking at corporate governance, boards, structures, policies and procedures within the company that would align with biblical values and or proper good governance of a company were thought of as important, but not nearly as much as the screening aspects. We believe all four are part of it, but every company takes a different approach, prioritizes these differently from a mutual fund perspective or an investing perspective. So while we saw that, the first gap that starts to occur is when we asked more about the awareness. So there was an awareness or familiarity about BRI, but when we asked the advisors how many funds exist, that you could invest into, 63% of the advisors believed that there were less than 10 mutual funds that approached investing from a BRI perspective, when in fact there are over 70 funds from CIF member firms and probably another 30 plus other funds that are not part of CIF that use BRI in their investing. So there are probably over 100 funds that exist for advisors to look at who use some form of BRI in their investing approach. And these cross over 28 different sectors or categories of asset classes. So you have a broad range of funds and asset classes that are available with funds that come from a BRI perspective. So this is the first major gap and misperception that we encountered in the information coming from the advisors. The next area that we talked about in terms of a takeaway was the education. And the first part of it is an education about, do you believe BRI is an appropriate approach, is a credible approach to investing? And as far as that question is concerned, we got a very strong agreement. 64%, or 2/3 of the advisors strongly agreed that BRI was a credible approach to investing. And another third or 30% almost were neutral on that subject, probably because they weren't fully aware of what BRI was. So you had very limited or little disagreement with the idea that BRI was a credible approach to investing. But when we asked the question, how do you feel about it, how do you feel in terms of your education about it and then therefore your ability to communicate it, only a third, or about 33%, felt educated, well educated or very well educated on the ideas of BRI. And this is going to lead to some challenges in terms of being able to communicate it, being able to talk to clients about it, and institute it into your practice. Like most of us, if you don't feel well educated on something, especially when you are the expert for your client, as an advisor is considered, it's less likely you're going to introduce the concept. You're not comfortable about how you answer questions, and so it's unlikely that it's going to come up. And so that education gap is a critical one, and one that we'll need to be discussing and working on as we go forward in terms of some of the recommendations we talk about. So from that level of education, let's dive into the areas of use or interest in and use of faith-based investing, or BRI. We asked the question about, is there or do you have interest in it? That interest is very, very, very strong. So if you see here, we had over 80% of the advisors said they were somewhat interested or very interested in BRI. But in practice, that interest is dampened, or the use of it is dampened by a variety of barriers that we'll talk a little bit about. But the interest level is extremely high in terms of the advisor base. When we talk about it now in terms of it being used in a practice, this is where we start to see that difference between interest and usage in some of the gaps. So the question is asked, do you use BRI in your practice? And only about a third, 35.6%, use or incorporate BRI funds into their investment practice. And 43% indicated no. Interestingly enough, the yes, the 35%, or the third of the advisors, mirrors closely the number or the level of education that they felt, right? So about a third felt well educated on BRI, and about a third are using BRI in their practice. And I don't think that that's that is isolated. I don't think there is some correlation between those two statistics. You take a look at some of this information. So while a third of them are using it, even in this case, in terms of market share, we have about a third of these advisors. But then when you take a look at how are they allocating within their firm's practice or within their own portfolios, and what you see is you have a very cautious approach to allocating to BRI funds, almost as an alternative asset class, as opposed to a more mainstream use of these funds, considering them to be just an equal to more traditional or non-screened funds that exist in the universe of mutual funds. So over 45% of those who are investing in BRI had an allocation to BRI funds that was less than 10% or less. And another 20% were at 20%. So very heavily skewed towards under 20% allocation to BRI funds. Long term, our goal certainly may be, through a Christian Investment Forum, to see this change completely and see the curve so that these numbers are on this side of this graph. But I think the shorter midterm goals would be to turn this more into a bell curve, to look at this more like this, so that the vast majority of advisors are using an allocation right in the middle. And then you have some that have a smaller amount because they're testing it or beginning the trials. And you have another group that are so passionate or have made some decisions and they're further along on their journey that they have taken a much more active role in utilizing more and more funds to have a much larger allocation towards these types of funds. But as now, I think we have a huge opportunity here, not only in increasing market share, but also in the opportunity to allocate more assets to BRI funds. The positive is that allocation towards BRI funds is increasing. So when you ask the question about where are your allocations going, we see that over 25% of the responses indicated that the allocations towards BRI funds had increased between 20 to more than 40% since last year, and almost none had been decreasing. So almost all either about the same or have been increasing in some respect. So that's a positive, and it stems partly from some of the structural issues that exist in the market and some of the barriers that exist that we'll talk about a little bit more. Now, when we go back and say, okay, we only had a third of the advisors who are using BRI, there's a full two-thirds that were not using BRI. So then ask the question about market share, market penetration. Let's look at interest from those who are not using it. And in fact, what we see is that you have 60% of those who are not using BRI today have an interest in. 12% very interested, and almost half somewhat interested in incorporating it. And I would say that the neutral ones are also possible candidates as more knowledge, as more awareness, as more education, and more fund options came into existence. So there is an opportunity here as well in terms of increasing the overall market share. So let's take a step back for a second and get into some of the details, some of the interesting results that we got in terms of asking some very specific questions to advisors. We asked a long list of questions to advisors, basically statements, and asking them to agree or disagree with these statements. In part, these were trying to pull out from them in different ways their feelings about BRI, their feelings about how BRI fits within the overall financial advisory industry, and so forth. And I'm going to highlight just a couple of them in here. You can see these, and this webinar will be available, and the slides can be available if you're interested. But let me start with the first one here. The idea here is, what is the role of an advisor? And there are two schools of thought, I suppose, if we simplify it. One school of thought is a more traditional historical perspective of the stock market, of the financial industry, and that is, our goal as a company, our goal as an advisor is to get the maximum return possible without thinking about any other factors. The bottom line issue is that, and then allow others to make the decisions about what to do with the returns that they get. So it's maximize return. That's it. That's all we're supposed to do. When we asked that question, interesting, maybe not, was the fact that we got a fairly high level of disagreement with that idea. So in fact, advisors see their role as more than just looking at an absolute return for their clients. They saw 50% disagreed with that statement. But we did have 23% that somewhat agreed and 5% that completely agreed that my role as an advisor is merely to maximize return. Obviously, from our perspective, we would, just from a Christian Investment Forum perspective, we would disagree with that. Although we believe it is important to get returns, we believe that you can get returns and you can also follow, the ethics of our faith, the Christian faith, in that process. So the next one I want to highlight here is looking at this question or statement. My firm doesn't include options for BRI investment portfolios. This gets to the barriers of structural issues of the number of funds available and whether those funds are available on various platforms, the access to, in a sense, investment options from a BRI perspective. And again here, I guess what was interesting was that we had, I think we thought might be a larger number that said they could not, that they didn't have options for BRI, but in fact we had a third of them completely disagreed with that, and another, say, 40% plus either disagreed or didn't agree with that statement. So not nearly as much of a barrier as we may have predicted, I think, going into this. Now, it is true, and I think we'll get into this a little bit, that there are still some barriers. The number of fund options available, the number of funds that are on platforms is not as significant as it should be or could be. And that's an objective that has to be corrected. That's an area that we will want to be working on to make more and more of these fund options available. But for now, it's a mid-term barrier, I think, in terms of moving forward in BRI. And then the last question I want to highlight here is this area of portfolio design. So the question was asked, can you make a full portfolio? Can you take only BRI funds and develop a properly diversified portfolio for a client? Now, we know that there are actually portfolios that do exist from CIF member firms. Eris Corporation, Camelot Portfolios, Creative Financial Design, all have developed portfolios that use CIF member firms or other BRI funds in the development of their portfolio that an investor could use that is exclusively BRI. So the question was, can you do that? And do advisors believe that it is properly diversified? And here we saw a fairly cross-section of the different advisors and different answers. I think this goes into the issue of somewhat not fully understanding or not being aware of all the options that exist, including the portfolios. We saw a fair number that probably said, I'm not sure because I don't know enough about it. And we had some that agreed that it can't be. But you also had 35% who said, 35, 36% of them who disagreed with that statement, basically saying that they believe you can build a properly diversified portfolio through BRI funds. So the next set of questions, again, a few more that we'll talk about here. Again, do you agree or disagree with the following statements? And this goes back to the first question we asked about maximizing return. So the question here is, religion and faith should not play a role in investing decisions. Kind of the church-state separation question, but from a financing perspective. And here, interestingly enough, we didn't get nearly the amount of agreement about only maximizing return. We actually see that almost all advisors said that religion and faith should play a role, because we had 90+% who disagreed with the statement that they should not play a role that basically suggests that they all agree with the idea that faith and religion should play a role in their investing decisions. Perhaps not surprising considering we had a large number of kingdom advisors, but I think it is important because it kind of pulls away a little bit from the ideas of just maximizing return. The next question I want to highlight is an interesting one, and we don't necessarily agree with this idea, but the statement is BRI is the right thing to do regardless of risk, performance, and complexity. So here is the idea that you should do BRI simply because God says you should, or you believe God says you should, regardless of performance, regardless of risk. So you should take extra risk to do this. And while there are arguments to say if that's what God wanted, you don't have to worry about risk, you don't have to worry about performance and complexity. From a Christian Investment Forum perspective, we would suggest, or our point of view is that it is our responsibility as stewards to make good decisions and manage the risk, manage the performance, and we believe it can be done. We don't believe it's mutually exclusive, that BRI is mutually exclusive to risk, performance, and complexity. But it's interesting that you see this kind of cross-section of answers as far as that question is concerned. And the last one gets into a little bit of the market opportunity. And here we go into a question of can BRI differentiate an advisor from others? And in this respect, I think it's more important to be looking at it from the perspective of can it differentiate an advisor from a Christian advisor or an advisor that uses BRI with Christian clients from those who don't. Not to compare you against another kingdom advisor, but rather to compare you and your portfolios to those who don't do anything related to faith-based investing. And here I think there was quite a bit of an agreement that, in fact, BRI, or using BRI, education about BRI, can differentiate advisors in a positive perspective. So those are just a few of the questions. I think it was interesting to get through some of that and look at that. The next step is really to say, okay, what is needed? What can we use? What is needed to increase the use of BRI, especially for those who are not using it or those who are using it in a limited way? And when we asked that question, the top four, and there weren't a lot more, but the top four answers to what are barriers to increasing BRI, the number one, clearly up front, was limited fund options. And as we've talked already about this, there is some misperceptions, although some of it probably comes from a variety of structural issues in the industry. But 17% of the responses indicated that the barrier was the limited fund options that exist. Now, while it's true that there are 70 funds through CIF members across 28 sector asset classes, and another 30, 38 or so funds that exist that still do some sort of BRI approach, the fact is that that's still less than 1% of the almost 9,000 mutual funds that exist. And we would hope that there would be more funds that come online that become available to advisors. I think that a goal could be up to 6% of the overall universe uses some sort of a BRI approach in their fund investing strategies. The fact is there are funds existing today, and the challenge is funds need assets to be invested into them to make them worthwhile. So obviously we have a little bit of this chicken and egg issue that exists in terms of increasing number of fund options that are available. Well, the second barrier is certainly this area of more information needed. This goes into some of the things, some of the tactics, some of the goals that we have at Christian Investment Forum, and certainly there is a need for more information and to educate advisors more on the various approaches to BRI. And tied for third were two issues. One is a structural one in terms of restrictions on platforms where funds are not available, therefore they can't invest in them. And that's an area that we certainly feel like we can improve upon by working collaboratively with advisors through the Christian Investment Forum and with our member firms to discuss and to work towards increasing the number of fund options that are available across platforms. We asked a question about tools. I think it's very, very similar responses, and that is about education on funds, education on how to approach this, how to communicate this, and screening tools related to that. From an information perspective, CIF has tried to provide more and more information on our website. We have pages specific to each member firm talking about how they approach this. We have a chart of funds on our website that advisors can access that shows all the different funds that exist across, again, the 28 sectors. And we're going to do more and more trying to train and provide resources for advisors, in particular working in collaboration with Kingdom Advisors, to increase the amount of training and marketing resources that are available. From a screening tools perspective, I think there are more and more sophisticated tools that now exist for advisors, more so than ever before. There are two screening tools or analytics that exist right now as far as looking at mutual funds specifically. The Evaluator is one, and ENSOGO, ENSOGO, are two tools that exist right now that are aimed squarely at advisors. And then there are even more sophisticated tools out there with various nuance to them from IW Financial, from MSCI, and even more of them that can cost a significant amount of money and which are used by a lot of our firms, like an Eris, like a Camelot, like a Guidestone, to look at how they do their own portfolio design. But the screening tools exist today much more so than they ever did before. And I think that's an educational process for us to focus on. So let me take one step towards looking at the gender differences. When we looked at this, we had a heavily skewed towards the male advisors, but there were some exceptions in terms of looking at a male versus female and what the differences were in their responses. First of all, not surprisingly perhaps, the women were largely younger or newer to the industry than the men were, and they were more independent and or from Ameriprise, CFAN group largely, than they were from the more traditional wirehouses, the Merrill Lynch's, the Morgan Stanley's, and others. So they tend to be newer to the industry, a little bit more independent in terms of how they've approached things. The other interesting thing was they were more interested in the social and environmental aspects of BRI. BRI is often characterized more so in certain negative screens than in looking at what are more commonly used from an SRI perspective. But the fact is that the female respondents tended to be more interested in that. And then they also tended to saw their role more as an advisor than a more traditional stockbroker or stock picker compared to the male advisors that responded to the survey. So let me get into some conclusions here. First of all, I think the main conclusion that we can stem from the survey results is that there is this expressed interest in BRI and faith-based investing, but the fact is that there's a gap between that expressed interest and the actual usage, whether it's on the number of advisors who use it at all or those who use it, how much they're using BRI funds in their allocations and in their overall assets under management. So there's a gap that exists there. And if we look at that and we look at the answers, there seem to be 4 clear reasons why there seems to be some of this gap. Number one, there is this limited awareness. The awareness of the number of fund options that exist for them to look at, the ability to put those portfolios together, the number of asset classes that exist in terms of the number of funds. That awareness is not there. I think the awareness of what BRI is still has some evolution to it, still has some need to build, but I think the bigger issue is the awareness level. Second was the universe of funds. Well, there are 70 funds exist right now across 28 sectors with CIF member firms. The fact is, again, that's less than 1% of the overall universe of funds in the marketplace. There is a need to increase the total universe of funds, but as I said earlier, this becomes a challenging issue when you look at it from the standpoint of those funds need more assets. As they grow, then more funds will become available. As more demand grows, more funds will come into play. So these things have to be balanced a little bit. The fact is that BRI funds are younger than the average in the universe of investment vehicles, and they also tend to be smaller funds than the overall levels. So it needs some growth. The reason number 3 is this idea of an incomplete knowledge of what BRI is and a lack of some knowledge about how to incorporate it into your practice. And the 4th reason is kind of somewhat related to that knowledge, is some uncertainty about how to incorporate it. Is it a mainstream issue or is it an alternative asset class? And a lack of confidence of bringing this forward, a lack of confidence in knowledge of the complexity, perhaps even of BRI, and how do you bring that into play. So from a recommendations perspective, from this survey, what we've suggested or what we see as strong recommendations to expand the use of Christian faith-based investing for everyone who's in this area, whether you're an advisor, an investor, a service provider, whatever it is. First is to support a common set of explanations. What we need to do is focus more on the fact that there is more alike in all the firms that are involved in this and all the advisors that are involved in this than is different. Yes, there are some differences. Everyone approaches it slightly different. But it's more important to focus on what's common, that heart issue, and to not compare against another fund or compare against another advisor who is active in this area, but rather compare against those who are not doing any type of screening, who are not doing anything that's related to a biblically responsible investing approach. The second recommendation is to acknowledge that it is not simple. We all wish it was, but as we all know, Christian faith isn't a simple process either. It's complex. It can be messy. And faith-based investing is also the same. As you begin the process, the questions come up. Sometimes the questions are difficult. Sometimes there needs to be some gradations of responses. There are gray areas. It is a journey, and that journey starts, though, with a first step. And so the idea is to begin the process. It can be uncomfortable to do it, but it's a first step is an important one. The third recommendation is to communicate clearly on the areas where perceptions or information gaps exist. The first clear one is in terms of the number of funds. Second one is in performance. A lot of misperceptions out there about the fact that if I do BRI, I'm not going to get the same return. The fact is that all the research that exists out there suggests that using screening tools in the process from an SRI or BRI perspective is likely a neutral thing in terms of performance. Sometimes it outperforms, and sometimes there can be some underperformance for certain funds. But those are gaps that need to be communicated and consistently corrected in the marketplace. The fourth item is to support advisors. Support an advisor with tools and resources to make this conversation easier. That obviously falls on a Christian Investment Forum, our member firms, Kingdom Advisors, but also other advisors who are more experienced in this to talk with others. The BRI community group at KA is a good example of other advisors helping peer-to-peer networking, peer-to-peer work towards helping others get more comfortable with this idea. The fifth idea is to identify and communicate with Christian thought leaders to create more awareness for what BRI is and why it's important. And finally, to embrace and support more research. This is a credible approach to investing. We believe that it has the rigor that supports a fiduciary responsibility in the market, and it's only through additional research, through CIF and others, that we can begin to show that credibility to the marketplace, to those CFAs and others who are out there that may have some skepticism about it. For advisors specifically, it's to take some time to learn about these fund options and to be aware that there is a very significant market segment out there that has expressed it. Nearly 80% of Christian investors have expressed interest in investing in faith-based funds as long as returns are similar. And that would suggest that we are only scratching the surface. We probably have a 0.3% of the total market right now is being addressed today. That suggests a huge market opportunity for investors, investment firms, and advisors. And finally, to communicate your interest in faith-based investing to your firm and also to Christian Investment Forum or Christian Investment member firms so that we can help you and help your firm move towards making these things available, given the fact that there is a legitimate business market opportunity in this area. So that's the conclusions, that's the recommendations. I want to make you aware that we have a number of resources available on the CIF website related to the survey. There's this infographic that you can get off of our website that goes through some of the key things in terms of the awareness, the knowledge and interest in BRI, and the actual use of BRI in the marketplace. And that's available on our website, as well as an executive summary of the results from the survey. I want to thank you for joining us. Again, the Christian Investment Forum is a trade association, nonprofit, made up of investment industry service providers who are shown here, who are interested in promoting biblically responsible investing to create awareness, provide education, and promote the use of BRI. If you have any questions, or you'd like to learn more about the Christian Investment Forum, please contact me. My contact information is here. You can visit our website, learn whatever you want, and ask questions. Thank you very much for your time today, and we look forward to seeing you at more of our webinars.